Welcome to Big Business This Week. I'm JD Durkin here on the trading floor of the New York Stock Exchange. And joining me this week, a very special guest, a name you may be familiar with, the creator of WallStreetBets, Jaime Rogozinski. Jaime, really great to have you here. I would love to get your take on overall market conditions. Jaime, you know as well as anyone, there has been no shortage of things to talk about and lots of volatility here on Wall Street the last few weeks as everyone's trying to digest the latest tit for tat on tariff policy, the latest announcement or public statement from the White House. How are you looking at the current state of the markets these days, Jaime?
I think this is an excellent question. The current state of the market is, well, first of all, as a trader, volatility, that's just, when things move around, that's when a lot of traders are able to take advantage of that, right? But to the same extent, the market is really supposed to be there for productive, long-term good use, investment, discovery, price discovery, whatever. Like all that stuff goes out the window as soon as you have somebody manning a Twitter account with the ability to not only move markets, but currencies and commodities and like you name it. And that fickleness, volatility induced from I guess what we call like lack of stability is a great example as to how the market can both be a serious instrument for just global growth, and it can also be a casino at the same time. And we're getting a beautiful taste of that.
Yeah, I mean, I'm really curious kind of for you personally, how do you go about tracking these markets and sort of how into the day-and-day fluctuations are you? Obviously, for a lot of day traders or people who do the zero-dated options game, they're really on the edge of their seat, kind of hour to hour throughout these cycles. Long-term investors and a lot of voices in the wealth management space, they say don't check it day to day. Kind of what's your cadence with the markets, especially given how up and down things have been?
Well, look, all market participants lie on a spectrum, right? From degenerate gambler to Warren Buffett. They're all speculators. In fact, the word in Spanish for trader literally is especular, or especulador, is speculator. You're guessing. Some people are just better at than others. Some people have longer time horizons than others. Some people have higher risk tolerance than others. And where you lie on the spectrum between gambling, and investing, it's literally on the same thing. Everybody can guess. And they're all participating at the same time. So they all have their own seat at the table. They're all able to use the volatility of the markets in their own terms. They might not care about the long-term outlook. They might not care about anything past their expiration date for their out of the money options that they bought because of some stock options or some announcement that's incoming. And all in all, I consider it a net positive because the more people that are involved, the more liquidity, the more participants there are, the more efficiency there is, even though that sounds contradictory in light of volatility, but the efficiency does actually get represented with more participants. And also the ones that are using the higher risk, the ones that are on the higher risk end of the spectrum tend to start going towards the Buffett side as they grow up and start getting mortgage and kids and responsible, right? So like, it's wonderful. It's a gateway drug, and they can all play, and I think that it's good. And how do I track it? I track it like everybody else. Check the news, I make sure like I know what the source of the volatility is. Is it fundamental? Is it just news? Is it a fluke? Is it a tweet? Is it something that's going to last a long time, or are people just scared?
Yeah. What is one story or one component, Jaime, about these markets or about the general world of business right now that you think we are not talking enough about?
Well, that's an excellent question. Crypto, and by crypto, I don't mean the coins. All right, like I'm on this quest to redefine what the word crypto triggers in people's heads, because they'll think, oh, the Bitcoin price, right? It's down, which means the whole thing is just a colossal failure, or it's up, which means it's a great success. No, what I mean is decentralized technologies, which are encroaching upon the traditional finance, if not like taking it over straight up. I just got off the phone a minute ago from someone that's literally in 100% crypto-based entity giving out MasterCard credit card, not debit, but they are now lending money to crypto holders. So like, I mean, if you're talking about The least, elephant in the room that nobody wants to talk about is how crypto is going. It's well in the process of encroaching and redefining what tomorrow's finance landscape is going to look like.
Does the willingness to adopt from the Visas and the MasterCards of the world surprise you, or is this a bit of an inevitable conclusion given the eventual adoption by institutional names of cryptocurrencies writ large?
It's not surprising because the regulatory risk component was the biggest kind of hindrance from big names being able to commingle. Had you asked me that question 4 years or 5 years ago, I would have told you, and I did actually, and you probably did ask me because I was with you guys 4 years ago in some interview. You're likely to find me say they're going to converge crypto and traditional finance. I've now shifted my stance hardcore. And this is given the fact that 99% of my experience and my core strength and my love is in traditional finance, is Wall Street bets. It is Wall Street. It is stocks. It is like banks. It is fractional lending. It's all that stuff. And I have now completely shifted towards crypto. And when I say crypto, I mean decentralized technologies. I'm not talking about the coins. I'm talking about decentralized infrastructure. That's going to take over. There is no meeting in the middle, no convergence. It is now traditional finance that has to make all the concessions, right? The 24/7 trading is just but the icing of the cake. Like, that is not even a technical decentralized feature. That is just like evidence of it. There's so much power, potential, money, and I don't know. Just that the benefits from it are painfully evident to me. And my take right now is I'm not surprised that Visa is getting into this. I'm not surprised that FDIC is beginning to ensure that's a regulatory risk when Trump came here that he removed. And what I expect to see next is like there being no palpable or detectable difference between whether you're using crypto stuff or not. In your broker, you can be able to buy and trade assets. People are already using decentralized stuff without realizing when they're sending remittances across the countries, blah, blah, blah.
How would you characterize the Trump administration's approach to cryptocurrency so far, Jamie?
They are the. Can I start with Trump coin and let me follow that one up with Melania
Please,
coin?
let's start with Trump and Melania.
And I'm
coin
done. And that's
there.
all I have to say about that. Like, look, the fact that they're embracing it, that, like on a serious note, right? There's no stopping crypto. Not just the coins, but the technology. There is no stopping it. That's part of its strength. There's no off button. For more that you try to, like, as much as somebody may want to do it, it's not doable. El Salvador has already used it as its a facto currency because of Latin American countries' precedent or history with currency issues. They're like hyper, devaluation or like. The default on their currencies. The Ecuador uses the U.S. dollar. You have a lot of examples whereby the legitimization of these. Now I'm talking about the currencies are actually good. The fact that the U.S. government is taking the lead. Previously, these crypto. Now I'm going to use the word currency to differentiate when I'm talking about decentralized technologies and coins. So these currencies, Bitcoin, for example, being a threat to the U.S. dollar. There is a protectionist kind of a reflex for politicians to say, nobody touch my dollar, because that's what gives us a lot of the dollar is the world currency of choice, right? Like, it gives us the ability to print as much as we want. There's a lot of flexibility. And that threat from another currency that nobody controls is a scary one. But the fact is that they can't stop it. And so them being the Trump administration embracing crypto and saying, since we can't stop it, we might as well join it and be the leaders. That's going to basically concede the fact that the US dollar it'll probably continue to be the world de facto currency for quite a long time, but it won't be forever. And the cryptocurrencies are going to be a serious contender towards it, and being able to get ahead of that, controlling that, and embracing that is a humble concession that is difficult to make. It's almost accepting the fact that the U.S. dollar has a weakness, and therefore they're embracing it, and it's the smartest thing that they could have done.
Jamie, what is one reality about the cryptocurrency landscape that you wish all lawmakers in Washington, D.C. understood better?
Cryptocurrencies. So I wish that they would understand. The problem is that cryptocurrencies is like one of those ink block tests. They give you like, what do you see? And right, everybody can kind of interpret it as their own. And cryptocurrencies goes from Bitcoin all the way down to, I don't know if I could say fart coin, right? That's probably the least offensive word I
The
can
most
come up
PG
with.
way to one to call it.
Yeah, and that one's like got the $4 billion market cap, right?
Of
And so
course.
those are juxtaposed with each other. It's difficult to go up to a congressman and say, "Hey, this is serious," right? Because there is a lot of noise and not a lot of signal. So you know, the what I would hope that the legislators, Congress and Senate alike, were able to understand is the fact that there is both a technology that exists that is not stoppable. Don't pay attention too much to the coins or their prices or the names of those coins or who emits them or whatever. Just realize there's a technology that doesn't have an off button, and that is coming, and it's already bigger than you thought. I think that 5 years ago when I was like starting to get into the esports, I will tell people, "Hey, have you heard of esports?" And a lot of people even still say no, and I say, "Guess what? Like more people watch other people play video games than they do the Super Bowl. They will fill stadiums to watch individual players," and they're like, "I had no idea." There's professional video players that play fake football that make more money than the actual football players. That is a reality that people don't realize exists. That isn't the same thing in crypto. I don't know if legislators realize that there is an entire world of both technology and money and potential that that already exists, and it's in its own little bubble. And unless you kind of poke your head into it, you don't realize its potential.
What most excites you about where the potential of this whole thing is right now, everything we're talking about? And are you confident that the necessary power brokers in Washington will be able to get us to a place where we could take advantage of that potential? Or are you concerned about a new generation of additional regulations and challenges, the
No, I'm
likes of
not.
which
Look,
many people thought, the
I
last
grew
SEC had?
I grew to appreciate the bureaucracy and what others might criticize as inefficiency of government. As having worked for a while, in fact, when I created WallStreetBets, I was working in a multilateral bank, right? Like this, these are quasi-governmental banks. So you have these quasi-governmental. So I learned to appreciate the fact that these inefficiencies create redundancies and that slowness to not be able to make quick mistakes, right? Like if you make too many changes too quickly, then it's impossible to predict unforeseen consequences. So I'm not afraid about legislation. I welcome it very much. There's enough like strong people that are in Washington right now that are vouching for crypto, and so I'm not concerned about that. I'm just hoping that they're working side by side. People like Brock Pierce, people like Brittany Kaiser, people like Matt Rozak. There's all sorts of really like powerful, knowledgeable representatives whispering in the ears of these legislators.
Sure. Yeah, I've known Brittany for a number of years as well, so certainly familiar with some of their names. Since you mentioned Wall Street Bets, and it's a really good opportunity to talk with you. I wonder, as you look back, Jamie, what was the aha moment for you that made you realize Wall Street Bets was the phenomenon that we all now know it to be?
2019, when they figured out how to game Robinhood to get infinite buying power. They called it the free money cheat code or the infinite money glitch, or this was the aha moment for me because it crowdsourced an arbitrage opportunity. Look, I'm going to use fancy words, right? Like so, yeah. Like Wall Street Bets, they masquerade themselves as these degenerate, like unsophisticated apes that just bang their head against the wall, right? That is almost making and I'm sorry, I hope you don't take offense to this, to those who wear suits that are CFA level whatevers, and they masquerade behind multisyllabic words that use sophistication to basically, use as their persona, right? But they're both kind of playing both sides. But guess what? Like what Wall Street Bets did in 2019 was to figure out an incredibly sophisticated asymmetric risk arbitrage, right? That is a word the suit wearing people would wear. The other guys called it a cheat code. It was basically saying, hey, there's an inefficiency in the system. We're going to, which allows us to basically take risk-free trades with size and leverage, and it's not on me because we are too many people to collect from. Or in the moment of GameStop, for example, if short selling was technically not legal and people were saying, let's manipulate the stock. You can't sue a million people. There are too many people. They're too small to go after. In much the same way that, wait for it, the banks were too big to fail in 2008, right? There was an asymmetric risk that they both took advantage of. The retail, they found this thing. They found the bug. They shared it online. They grew it. They cooperated numbers, and they were able to actually use those inefficiencies to their advantage to monetize them and, thankfully, close that loophole so that they can't repeat it again, right? That's the part of arbitrage which is actually the net positive, right? Somebody finds a problem, they make money from it, that problem is fixed, the system is now more robust and can the systemic risk associated with that inefficiency has been closed. So that was my aha moment, 2019, 2 years. That's when I wrote my book. That's when I started my trajectory.
Yeah. And I love asking you these questions, both as one of the suit-wearing members of the Wall Street community down here, but also as a member of the media. And I don't mind asking you for your thoughts on how the media responded to things like the GameStop phenomenon, the descriptions for a general public audience of a retail trader, the sort of keyboard warrior depiction that was going out, and how do you wish in any ways that maybe that coverage had been done or should be done a bit differently?
I don't know if you're like insinuating that I was unhappy with it. I don't know.
Oh no, not at all. I legitimately. Yeah. I'm legitimately fascinated because you, as the being in your form there as the creator, I'm sure you had to watch the evening news. You watched the 60 Minutes of the world.
I was on
the
it.
Good
Yeah,
Morning Americas
no,
of the world. Try and do their best to say, here's this phenomenon that's going on, and here's why it matters.
So here's actually kind of like, here's the surprise, right? When I created Wall Street Bets, I had a lot of reasons to do it. One of the reasons was because there was an issue with Wall Street that needed to be broken. It was born, as was crypto, from the heels of the financial recession. I'd lost my job. I'd been unemployed for a while. I hurt, and then when I finally got my job in DC, I would walk past Occupy Wall Street, satellite movements, and I see the 99% complaining about the 1% that were up there in their penthouse looking down and not doing a thing about it. And I realized the way to fix the system is to get the 1% to complain about it, and they are then going to fix it. And so my assumption at the time was, let's go ahead and behave irresponsibly. Let's do shenanigans. Let's call this thing a casino, Wall Street Bets. Let's unapologetically abuse this thing as a toy so that we can force. I want the media to portray these retail participants as irresponsible degenerates that are breaking their fancy toy. I wanted legislators to do the same thing so that they could put guardrails around it. Because I wanted to fix it. It was break it to fix it approach. To my surprise, GameStop comes around and the exact opposite thing happens. All of a sudden, the media portrays the retail people as the Davids, right? And the Goliaths were the big ones. Congressional hearings come around. I was like, here comes the moment where we're going to get finally, we're going to force people to behave responsibly. And we got the opposite. Legislators were lambasting Robinhood for pushing, disabling the pause button and lambasting these, the clearinghouse, the T+3 settlement, things like the whole, they were actually saying, hey, it's not fair for the little guy. And so they were encouraging, right, this kind of behavior and this participation, which I also welcome, right? Because in that sense, I will take that as well because it's recognizing, and at that point, the 99% is a legitimate collective entity that is now, holding a seat at this exclusive poker table. And so I was very happy with the way it was portrayed. There was countless number of documentaries, there's movies that came out they all actually paint. I've yet to see one portrayed in a negative light. So I don't have a single complaint. The only wish that I had was that some of the intricacies involved with the short squeeze were not excluded, but they're so technical and so complicated that CNN just can't get it to their audience. CNBC, Cheddar, like you have like the Wall Street journals, like the people that understand the sophistication. It wasn't just lots of people buying the stock, that sophistication I think is under appreciated and reported on. So, but then again, few people would understand the technical side, anyways.
Finally, you called it asymmetrical arbitrage, and you watched the community create something that got the 1% to complain.
Asymmetric
It was,
risk.
or asymmetric risk.
Yes.
Uh, is there another one that you can see coming? Is there
Oh
another
yeah.
big sort of social grievance where you can start to see under the hood and say, maybe it hasn't reached critical mass just yet, but it could very well be coming? What is that right now in the system, in the markets, in the economy today that you see?
I mean, yeah. Okay. Man, you used way too many. You contextualize that question in too many ways. I got too many answers for that one. So the answer is, on a social level, is there another David and Goliath unfairness where we need to get back at him? Well, I think we're good. At this point, the playing field is now becoming leveled. You now have dedicated employees in all these investment banks whose job it is to literally monitor social media. Mainstream media reports now have links on the top of their page for meme stocks. Like, meme stocks is an actual thing now, right? Like, so I don't believe that there's some grievance left over. I think all those were they came from 2008, and I think that score was settled, I guess, if we want to put it that way. But is there any asymmetric risk? Do I see some other big news event coming, or some inefficiencies? Because I did use the words asymmetric risk next to the word arbitrage. Is there arbitrage coming? Yes, there's big arbitrage coming, especially in light of this convergence of integration, I guess I'm going to call it, between these different technologies, right? Like the tokenization of stocks or vice versa, like the ETFization of crypto, right? Like, you're starting to see instances of the same assets, right? Even if they're synthetic, now appear on both places. That's going to just breed inefficiencies. The fact that you still have markets that are open 24/7 and ones that aren't, right? That just like begs for free money, right? And that's going to force those, that's going to create pressure in order to extend those market, the hours with which they're open. Futures do an okay job at mitigating some of that risk, but not, like if Elon Musk decides to do one of his tweets that gets him in trouble with the SEC, then yeah, on a Sunday, then yeah, like, crypto at this point has plenty of arbitrage to exploit. And as the regulatory risk component is off the table, that allows big players that are actually very good at arbitrage to actually participate. I think that JP Morgan, Morgan Sachs, Morgan Stanley, they love to be able to say, I have legal permission to exploit this inefficiency for personal gain. And I hope they do, because that makes everybody better, right? And it's also going to be the same for the retail side that likes to crowdsource and cooperate, and they have this collective intelligence, if you will, that they've perfected.
Awesome. I realized that we just been cooking on this, and I did not mean to disregard a very important question. So let's please conclude with this, and thanks for the time. You took on the role of Chief Strategy Officer at Wire Network. What drew you specifically to that component of the blockchain and crypto space, and what should people know who might otherwise be a bit unfamiliar, Jamie?
Yeah, so that's a great question. I have a very, very big I have a huge ambitions with regards to Wall Street Bets and in the direction of crypto. However, there's a technological barrier that is prevented that I'm not going to get too much into it, but crypto doesn't talk to itself properly. And it should, and it causes problems. It causes fragmentation, segmentation. It prevents people from onboarding easily. It creates liquidity issues. It's a highly technical almost like math formula, right? That has prevented crypto from becoming an entity in and of itself. Because right now, crypto really is a lot of little cryptos, not just coins, but technologies. And in order for it to succeed, it needs to just be an agnostic, decentralized concept. And I became the CSO of Wire because Wire is the first and only technology which demonstrably proves native universal interaction between two. It glues all of crypto together. Look, I'm wearing like my Hufflepuff and my Ravenclaw shirt, right? They're all part of Hogwarts. If you want to talk about what Wire is Hogwarts. And if you want all these wizards to work together against this, Voldemort or whatever, if you want to go back to that analogy, then you need them to all talk together. Wire is it's an unsexy thing for me to sell because it's a math formula, but it makes a lot of people real happy because it natively, trustlessly, without third-party consensus, it makes people be able to buy Bitcoin. Sorry, they can buy Trump coin with Bitcoin in one shot natively, and that allows me to then do my next act, which is going to be bringing Wall Street Bets back with a vengeance.
Okay. What an excellent note to leave it there with. Man, we should have this whole conversation. If there's a Wall Street Bets for like the Gringotts bank community in Harry Potter, that'd be awesome. And I'd love to know what monetary policy looks like at Gringotts, but maybe we could talk about that for the next time we have a one-on-one sit down. Really grateful for your time. That is Jaime Rogozinski. He is the creator of Wall Street Bets, and really grateful to have you join us this week, Jamie. Thanks a lot.